Power up. Welcome to Energypreneurs, where I bring to you the exciting new opportunities in solar power, battery, and electric cars. I'm your host, Sohel Hasni. I have been tracking and analyzing these technologies on LinkedIn and Twitter for more than 10 years. Now we meet on podcast. Okay, good morning, Darshak. Good to see you. How are you?
All good, all good. Nice to see you too, Sohel.
Yeah, we are both back in Manila, so that's
Yeah.
interesting. Okay, Darshak, before we go into the detail, I know you are one of the gurus in all sorts of computing that we have done for climate and its impact. Maybe you want to introduce yourself first, who you are, what you have been doing.
Sure. Thank you for this opportunity, Sohel. I have been a renewable energy person to begin with. That was way back in early 90s. And thereafter, I have been working on energy efficiency. I have worked on, and that gives me the basics of putting all the clean development mechanism. That was my introduction and baptism to the whole world of GHG accounting. That's what I have started doing. This was in 2004. So I was initially an auditor, GHG auditor, for a company called, which was UNFC accredited company called TUV in Rhineland. And thereafter, I have been working as a consultant with ADB. I have been expert with UNFCCC on methodological related issues. And I have also been a member of accreditation team of UNFCCC, which is to check the correctness or the accreditation process that goes on. That is where I have assisted UNFCCC also. And since I was with UNFCCC, including with you, I've done some work, some very interesting work, thanks to you, on transportation sector. I have worked on waste to energy. I have also worked on renewable energy, all sorts of the projects that ADB has worked on. CDM, which is the foundation of overall GHG accounting that has taken place. So that's my overall background as far as GHG accounting is concerned. And I think that maybe we can talk further on what other specifics are.
Yeah, so for an ordinary listener, GHG account is greenhouse gas emission accounting. So any project that comes in and make a claim that we are going to save that much carbon dioxide, and the methodology used for counting, because you cannot go and carbon dioxide kilograms, right? They are not visible.
Right.
So that is what GHG accounting is, right?
That's true. That's true. So, I mean,
there are international protocols
that's
which, and you check as an auditor compliance to those protocols as well. That's what you're saying, right?
Right. So I have worked on one part of it, which is a clean development mechanism. Oh, and that has been one of the most comprehensive mechanism that can take place. But over a period of time, different variants have come as far as GHG accounting itself is concerned. Because when we were doing clean development mechanism, GHG accounting was not the word so much popular, but the principles remain same. And over a period of time, there have been voluntary mechanisms which have come in. There have been more advanced mechanisms which are being claimed by, say, gold standard. There are other mechanisms which are, say, Japanese joint crediting mechanism. So different, even recently, say, now the more fragmented part, wherein, say, like China has got its own emission trading scheme. Similarly, there is a European emission trading scheme. There are schemes in US. So these have started coming up, but overall principles remain the same.
Okay. Let's take a step back. This is
right.
The scientist talk. So the fundamental need for GHG accounting, or counting the carbon dioxide avoided by a project, because correct me if I'm wrong, when CDM mechanism, the clean development mechanism, was established in late 90s, The idea was that it's very expensive for a developed country to save CO2.
Yes.
But it is easy to save CO2 in inefficient processes in developing countries.
That's true.
So, and then carbon dioxide doesn't matter wherever you save anywhere in the world. So if somebody could, by a project, save 10,000 tons of carbon dioxide, say in Bangladesh, it may be much cheaper than saving that 10,000 tons somewhere in US, right?
Absolutely.
So then there was a mechanism whereby this company in US could buy the avoided carbon dioxide credit. That's where the CDM credit comes in, so that they can claim that we are not doing any or not putting out any additional CO2 in the air because we paid somebody, and through their project, they are offsetting how much I'm going to put in the air for the time being, something like that. No,
that's true.
Then you had the mechanism to ensure they followed the international protocol so that those counting are correct, and that's GHG accounting in general. No,
that's true. That's overall, say under Kyoto Protocol, there was a clause which said that the developed countries are going to reduce, say, 5.2, if I'm not missing it, that was 5.2% of their baseline emission will be reduced over a certain period of time. That is what they said. So that is where, since there was that quantification, there was a need to calculate as to how much they have saved by these projects. And that is where the whole thing came in. The other important part was, of course, the monetary part, because there was an exchange of money involved over there for amount of emission reduction. It was very much necessary that the accounting is precise, rule-based, and follows certain principle. So that is why this was under the umbrella of UNFCCC, CDM established those rules and tried to do it.
Yeah. So okay. So let me again understand this. So there were agreement that, okay, in my example, the 10,000 tons right will be bought,
right?
But then they paid sometime the money in advance. In this context, the US company. So then it needs to be sure, someone needs to ensure that those negative CO2s have been produced through a protocol. Okay,
that's true.
That's interesting. And there are, of course, many other similar protocols are established, and they all apply in general the accounting guideline, if you like. No.
Yeah. So they have tried to put up their own accounting guidelines, but I don't think they are very different. I mean, there are people who are saying that CDM is too complex, so they try to simplify it. There are people who think it is too lenient, so they try to make it more complex. So, but that remains one of the fundamental principles under which they do it. And it has been quite an extensive mechanism wherein a lot of discussion have taken place. Of course, a lot of bureaucracy has taken place, but a very well thought of and a well debated process that has been.
Yeah, absolutely. From my energy efficiency lighting project in 2008, I remember, okay, a compact fluorescent light, how many hours it will run if it was put into the bathroom? That's when I think I pulled the project out of the CDM process. Was costing us way too much money to get this. Now coming back, when you receive, now I understand you are one of the key team members for the Asian Development Bank when a project comes through with certain claims of CO2 emissions saved, right? So you look at it. So what's the fundamental approach? Can you take us through the steps that you might look at? Is that easy enough to do? Suppose I'm putting you a proposal, a project. I want to do a solar power project, for example, and how you're going to establish that this 10 megawatt solar power, how much carbon dioxide it will save, of course, based on the existing system and other. Do you want to take us through in simple steps?
Sure. I mean, let me just tell you, I mean, as far as ADB is concerned, ADB has already published a guideline, GHG emission reduction guideline. So that is already there. Subsequent to that, or in parallel, there has been an IFI guideline also, which has come in, wherein World Bank, ADB, and other multilateral
But the
banks are.
general
Yes,
principle should be the same, right?
right. So these are published things which are there. Now, going to the specific example, say you are, so one of the first things, as there are two fundamental things that is important in order to arrive at the emission reduction. One is, what is it replacing? The solar power plant, what is it replacing? That is one thing. And how much it is replacing. So one is, so what is it replacing is, which grid it is replacing. It may be replacing a grid in Nepal, it may be replacing a grid in India, it may be replacing a grid in Australia. So each place, the characteristic of each grid is different. Say a Nepal grid will be 100% hydro grid. So putting up a power plant or solar power plant over there is going to replace hydro. An India grid will be a mix of coal, majority coal, plus say some other renewables and hydro power plant. So that is what it will replace. So, and similar way in Australia.
So geographical location is very important, because
right, the system
solar,
within, true.
okay,
the system within which you are operating. So the per kg of electricity used, the emission in case of India can be of order of say 0.8 kg of CO2 per kilowatt hour. In case of Australia, it can be say 0.6. I'm just giving taking an example. And say in case of Nepal, it depends whether the grid has reached at that place. It can, if it is grid which is it is replacing, then it can be 0. But if it is, say, it is replacing an off-grid project wherein diesel generator sets are there, then the emission factor will become 0.8, which is the small default emission factor. So depending upon where you are placing or what you are replacing, it is going to come up. Then that is the first step. Out of the two questions, we have taken one question, that where it is replacing and what it is replacing. Second question will be how much it is replacing. So then that is the one that you have to find out as to how much is the electricity produced by the solar system. That is the measure which will say that what is the amount of electricity it is going to replace. So say it is a 10 megawatt hour, 10 megawatt system, supposing, and normally say in case of India, it is the plant load factor is going to be 20%. So
okay,
10 meg.
Let's do
sorry,
it.
Sorry. Okay.
Plain English version.
Right.
I have this air conditioner running here. It's an older place, so it's about 2.4 kilowatt air conditioner.
Right.
I run it for 10 hours, so which is about 24 kilowatt hours.
That's true.
Right?
Right.
And then 24 kilowatt hour, typical electricity cost here is 20 cents. So it cost about, oh dear, that's quite a lot. It costs about $4 to run 10 hours. Okay. So coming back, so this 24 kilowatt hour, if it's a factor, intensity factor is say 0.6. In the Philippines, maybe 0.6 is okay, no?
Yeah, it should be okay. It has got large geothermal, yeah.
Yeah. So 24 times 0.6, about 14 kilogram of CO2. Is that correct calculation? Right. Yeah. So if I'm running, this is for a general audience or everyone of us to relate to these numbers. If I run a large air conditioner for 10 hours, right, I am producing equivalent of say 14 kilogram of carbon dioxide. That's true. That's true. That's true. And that is the baseline. Right. Right. And if my neighbors set up a 2.4, no, not 2.4, say about 8 kilowatt solar panel on the roof, because Philippine on an average, it runs about 3 hours, right? Right. So that, it will be more.
Yeah, more,
Yeah,
yeah,
something
okay.
like that.
Let's take it. Yeah.
Yeah, 6-7 kilowatt solar panel somebody set up in the roof, and I use that electricity from then. So basically I can say that this 14 kilogram of carbon dioxide that was I was producing, now it's offset by the solar.
That's true.
So, and that's the sort of CDM in general term, right? I
That's
want
true.
to keep on running air conditioner, but I have no choice. I cannot go solar or cannot put renewable, but someone who can, so I'm buying that credit, right?
That's true. That's true. Probably your neighbor or as end user, probably you can try to use, I mean, get that amount of uh, carbon dioxide saving, and you can say somebody that, okay, I've saved so much of carbon dioxide and I want to sell it. So that was the basic principle under which you were operating your CFL project, wherein you were aggregating the need, and that's where the grand scheme of, I mean, that was the next step you were thinking, basically, of expanding it to energy efficient fans, energy efficient air conditioning, and etc. etc.
Yeah. Now, I want to take this discussion. So if I am coming back to the same number, that I have this 2.4 air conditioner running 10 hours, I'm producing roughly about 14 kilogram of CO2. Now, if there was a carbon pricing, the pricing we are expecting is about $40 a ton, right?
Yeah, I mean, optimistically, maybe after 2030, probably, yes.
So,
And it's still the whole, yeah, carbon pricing, how we see it, there is the World Bank publishes the prices every year. And the prices have been varying from, say, almost $150 to $170 to as low as $2 to $3,
yeah,
or even less.
Oh dear. So what is the average price? $40 a good price?
Yeah, should be. I mean, European context, yes, you can take that.
Okay.
That's it.
So I'm just trying to put a perspective for a residential customer. So my 14 kilowatt hour, sorry, my 14 kilogram of carbon dioxide that I'm producing, my other option to pay the carbon tax, if it is $40 a ton, which is about 4 cents a kilowatt hour, roughly.
Yeah.
So that means for my 14 kilowatt hour, if I paid a penalty of 56 cents, then I'm carbon neutral.
Right.
So the another way is either the grid has to charge me a carbon tax of 56 cents, oh my God, for this consumption on top of my electricity bill,
right,
or I go and offset. So that's the whole mechanism of UNFCCC and CDM, right?
Yeah.
So for this hypothetical solar project, what options people have to trade that saving, right? You were saying earlier, you mentioned JCM, you mentioned others. Can you take maybe what these things are?
The options will depend. I mean, as of today, I mean, we can, and the picture will change in next 2 to 3 years, I'm sure, because the Kyoto Protocol has expired, and now Paris Agreement is coming in, and further discussion has taken place in Glasgow. So that will change. But as of today, in developing countries, we don't have any very strong mechanism to offset to sell the option, except for the voluntary mechanism. So that is voluntary is one thing. Second option will be to
no. Voluntary mechanism, you are saying in this example that I put out, if I cannot buy the 56, I'm happy to say spend the 56 cents, I cannot buy, then I can actually go and give my neighbor that 56 cents saying, listen, I buy the credit that you are creating so that I feel that I'm not adding, similar to large scale CDM. So that's voluntary, right? People just doing it without
voluntary, in the sense, voluntary, I'm saying in perspective of the buyer and mechanism. So right now, if you are taking the mechanism will be either tax, which will be one way of quantifying carbon dioxide. Second will be trading, which is again when a government to government or like CDM, there is a regulatory mechanism which is there. And third will be a voluntary exchange, which does not involve any I mean, it has its own rules, but it will be a voluntary thing, say Microsoft buying something, by Microsoft buying carbon credits to offset its own emission. So that is voluntary, wherein so that is one of the ways that an American corporation wants to buy it, and within that framework it is able to do this.
Yeah, but voluntary is still, you need to, it's voluntary from the buyer's perspective because they don't have any obligation to do it.
Right.
But from the supplier's perspective, you want to make sure it is a product that is certified and verified, no?
Yeah, so voluntary market also has its own certification protocol and everything. So that is also very much recognized and has been accepted by these corporations which are buying from them. So
Okay.
they follow the similar principle and they try to do. So that is one part. Second is, say, if say Indonesia, Bangladesh, they have signed a joint crediting mechanism, which is a bilateral mechanism with Japan. So that is another way of doing it, which again has its own structure like UNFCCC of approving methodology and doing certifying the carbon credits. That is a joint crediting mechanism of Japan. That is the other option. If I'm not very sure if Philippines is part of it, but that's one of
Philippines is part of it. So this is again JCM, the Joint Credit Mechanism.
That's true.
Initiative of Japanese government.
That's true.
To go and buy credit from other governments who they have agreements with.
Right.
And then what they do on the other side, do they sell it back to the industries or the government keep the credit?
That goes into a little bit complicated thing, which I'm not fully aware of it, but it is something wherein there is all money exchange does not. One is that it will keep to meet the obligation of Japan, basically. That is how it will try to do, and obligation of the respective corporation, because down the line the corporations of Japan will also, there will be some Japanese corporation also be there. So the other way is Japan being technology rich, it is going to in turn, it may or not always give the money, basically, but it may be in exchange for the certain technologies that it will be providing to save electricity. Say supposing your air conditioner, if it is say more efficient air conditioning, then that is the technology it is providing, and for that technology you give the carbon credit to the Japanese company. So similar the way it was also envisaged, say, for CFL.
Now these are lot of technical mumbo jumbo, all these things involved, right? So
yeah,
for a project developer, if somebody just wants to do a 100 megawatt solar and suddenly found out that, listen, this is avoiding few thousand tons of carbon dioxide, where should they go to get their head around what money may be worth? Of course, they can calculate, as you said, they have to calculate how many kilowatt hour, and they get some emission factor, meaning how many kilogram of carbon dioxide per kilowatt hour, which is a published figure ADB publishes and everyone publishes, right?
That's true.
And what factor is that? Grid intensity, or what do you call it?
Emission factor.
Emission factor. So,
yes, emission factor.
Yes, it's emission factor. So once people convert that, and then they can roughly use $30-40 to get a notional number at how much will be the value, right?
Yes.
And then what they have to do? Shop around? Is there a...
No, then they have to get it certified.
No, but where do you start? How do you learn about all these processes?
So it depends on what mechanism you are choosing. So say supposing If you have, so you have to first establish whether you are going for that voluntary credit or you are going for a credit which is coming from bilateral mechanism or otherwise. So that is how it will be. That is the first step. You need to decide as to, often it is your buyer who says that we will be operating within these framework.
Okay, so first, it's
It can be,
important to identify a buyer.
yeah, that then, as you have said, and you have, as you have experienced, it's a pretty complex process. So you don't want to go to that process unless you are really sure that you have somebody at the other end to buy your credit. That will be a more practical approach to begin with in these circumstances as of now.
But more or less, the quantification of the CO2 will be same or similar, doesn't matter which methodology we use.
Well, yeah, more or less it is not going to change too much. Yes, more or less it is, will be the same.
So you have to decide as a project developer what sort of price you want.
Yeah.
And that will decide which market you go to, no?
Right, right.
Is it fair to say that the voluntary market has a higher price than other markets?
No, I mean, it will be very difficult to quantify or say. It all will also depend on, moreover, monetary market, it is not like a stock exchange. It is over the table that discussion takes place and people buy, and each buyer has his or her own criteria to decide. So won't be, again, it depends on which market are we operating in.
Okay,
so,
but I mean, ideally, it should, because there's so much energy has a spend, right?
Right.
I was thinking going forward, there must be an app or something people can easily say that I'm doing solar in the Philippines, latitude 38 degrees.
That's true.
Roughly, you get a number, and there should be an app-based marketplace that connects me who may be the buyer looking for projects, no?
Yeah, I think so. It should have develop, and it's much better that way. I agree with the idea, and it will be much better that way. So, and there will be a lot of aggregators who will start working towards this. So those aggregators will, and often, as we have said, is seen in case of CFL also. The aggregator was the manufacturer himself, who while making the product, while selling the product, he took the carbon credit in turn for the giving the technology a more efficient technology. That's what they were trying to do. And then once they have done that aggregate, they have known that sampling basis, they will be trying to decide as to exactly how much emission reduction has taken place, and then they will be able to sell it to somebody, which will be vetted, of course, by the validators.
So if a younger person wants to get into this industry, this may be a little bit more interesting than other form of accounting, I would say, as a technical person. What resources people need to access? What can people do if they want to learn about this? Where can they go? What's the first?
I'll say the best place to go for this is, of course, to go to the CDM website, which is fairly complex, but that gives you, that's the whole framework. That's the fundamentally everything you need to know is there. And the other part can be, of course, there are courses being run by a lot of validators themselves. They do run courses, and there are GHG accounting courses. There is ISO is also there now for GHG accounting. So that can be, so ISO, you can take training on ISO, say 14064 or some. I'm not very sure about the number, but there is already a GHG accounting ISO. So for that ISO training also, you can go and try to learn things.
I mean, are these things going to be simplified? Because if we want to take climate change seriously, which looks like world is doing right now,
right,
this process needs to be simplified, no?
No doubt about it. It was really a great thing to be a consultant in that area, because The things were so complex, so many rules and regulations. So the process has, towards the end of CDM, that process had started. They established the emission factor, which is so easily available today, was not available at that point of time. That was one thing. Second, they started doing default additionality. There was a complex process of proving a project's additionality. Now they've said that certain type of projects, they are by default additional. You don't need to go for additionality. So that simplifies the process further. Standardized baseline, as we discussed, that is the other thing. And also the rules have started becoming simpler for, say, smaller projects. That is what is happening. So,
Okay. So now that you mentioned additionality, I think let's discuss that topic, because these are the technical mumbo jumbo we use every day. So additionality, again, in my understanding, correct me if I'm wrong, if you are doing a project, this is almost viable, but not. But if you can get paid for the avoided carbon dioxide, then it becomes nicely viable. So that's where there was an additionality test applied, saying, show us that the carbon dioxide, the paying for the avoided carbon dioxide will help you to cross that line, right?
That's true. That was the way. I mean, additionality can be proven in could have been proven in number of ways. One is saying that it is financially not viable to do this clean energy project because it is too costly. Second is maybe it is first of its kind. It is not tried ever before. So that was one of the other ways of proving additionality. Third thing is, of course, to say that the technology is not available. It is and the person is facing certain, say, legal issues or other things. So these are different ways of proving additionality. It was not only a financial thing. Financially also, one has to go in number of ways. One has to prove that what is the hurdle rate, what is the say minimum return one is expected to give when they are wanting to do a project. So these were different things that we were trying to analyze and trying to prove how a project can be additional.
Yeah, I remember in our Gangsu hydropower project in China many years ago,
Right.
about 2005 or something. The government was stunned that they are doing this hydro project anyway. And this was, of course, I think first or second in the province. So it was quite new. But we were able to get them additional money. This was the first CDM project, I think, for ADB.
Right.
And I was doing the financial. So we got the story right. And they were really stunned that someone actually paying for it. And then, of course, that triggered a lot more hydro in the whole Gangsu province. So that's what the additionality is, right?
That's true.
Okay, interesting. So where do you think all these things are going in future? What's the future for us?
Oh, I mean, future is very interesting. Let's put it that way, because following Kyoto Protocol had an umbrella setting which was established through CDM, and there was a central mechanism. And of course, for other countries, there was a European emission trade, EUA, and other things were there, but they were more or less centralized system. Now almost everybody is on its own. There is going to be, each country is going to have its own emission trading market, basically, which is going to emerge. I mean, very few countries are at that point right now. Say China has already done they've gone ahead quite a bit on that, and they've since 6-7 years they have been doing experimenting on it. Indonesia is likely to come up. India is following a very different path, basically, but it is trying to do it in its own way. Thailand is coming up. So these are the different markets which will be coming, which will be there. Then there is, as I've said, there will be a bilateral mechanism market which is going to come up. Then there will be a mechanism which will be sector specific mechanisms are also being thought of. Say it can be a steel sector related mechanism, it can be a mechanism related to cement sector that is likely to come up to, because now everybody has started realizing that when you want to reach 2050, 2060, 2070 goals of being net zero, uh, everybody will have to contribute. I mean, so each and every industry, each and every sphere will have to calculate as to how much they are reaching, how much they are contributing to the overall net zero target. And that is why that contribution will start, I mean, that discussion will start taking place, and we will be having some numbers being put up by different people.
I mean, is it fair to say that net zero everyone is committing? So it's fair to say that all companies, irrespective of what they believe or not, will be sort of forced by the society to offset their emissions.
That's true.
Right? Yeah. So I think that's coming in a way, right?
Yeah.
And so whether there is a formal carbon tax or otherwise, they will be. And then maybe the most efficient system will be for people, governments to tax these companies and use that money, like you said, bilaterally go and buy offset, because at the end of the day, countries, the nations, they sign the Paris Agreement target. So do you see that happening? Like
in fact, it is, yeah, I mean, money tax, that is one part of it. The second is also almost like a peer pressure that will be coming up. So steel industry per se, one country, one company is trying to say that I am having my carbon footprint at this, and that is being published, and that may start one competition. Second is European Union is coming up with carbon border tax. So what they will be doing is, any company which wants to sell, say, steel to European Union, then they will be seeing what is the carbon footprint compared to, say, European Union, and then they will be taxing those imported goods.
Okay. So you tax at entry. So okay.
Yes. So European Union will be actually be taxing, say, $50, $40, whatever is that. So what will happen? The countries which want to export everything to European Union, they will be forced to do this kind of work,
because they can, their motivation would be, rather than paying the tax at the border,
right?
They can avoid the same CO2 at a cheaper price if they improve their processes.
That's true.
Interesting. So that means will there be a process of someone certifying the steel production, saying it's a grade 5 steel in terms of CO2, grade 4, grade 3?
That's true.
Some process there?
That should be there. I mean, I have not known it exactly, but I mean, definitely there will be a process to do that, because if, I mean, European Union will also obviously be trying to do. The other thing is also going to be, apart from peer pressure, there will be, say, car companies. So car companies will be saying that we want to have, they will be having their own corporate mechanisms or corporate commitment to minimize their carbon footprint. So the car companies, as a buyer for this steel, will be telling to the steel companies that we will be buying steel from whichever company is giving us the lowest carbon footprint. So that will be another way how things will start getting pushed into the whole system. So there will be a lot of pushes and pulls. Earlier there was only one way of doing it. Now this is going to be a very different ball game, wherein there will be pressure from all the different thing. The other thing that is happening is also financial institutes which have started committing themselves to do net zero, and they are saying that our own portfolio, lending portfolio, will be looking like this. We will be only lending to the people who are having lowest carbon footprint, or these are the principles of our lending, or there is Paris Agreement alignment that the financial institutes have started committing to. So that is another pressure point which is going to come up. If things come up, let's say, from financial institutes themselves, it is going to make things much more important for the industry to follow and toe the line.
Interesting. Good. Very good. Thank you very much. It still remains quite complicated. Thank you, Darshak, for your time. Is there anything else that I could have asked you? Anything else you want to make comments? We had a very good conversation for some time. Yeah.
No, this is what we have touched upon a lot of points, and these are really important. And the last points that we discussed, that there is a pressure point. Earlier, there was just one motivation to go for reducing your GHG emission. Now there are multiple. One is countries' own own motivation to do it, which country, once it has agreed at the UNFCCC level, they will percolate it down to the industry level. So that is one. Second is this export market. Third is motivation for money. And of course, the civil society will have its own things to do. So I think these things will work out one way or the other.
That's interesting. Peer pressure, and it's very important. One of my client country, and this is putting my Asian Development Bank staff hat, contacted me day before yesterday saying, you guys did a feasibility study 10 years ago. We did not look at it. Can we get a copy? Because suddenly at the head of state level taking an interest that we have to do something now, that these are like a fossil fuel rich countries, right? So suddenly the penny has dropped. So yes, thank you very much for your time. A lovely discussion. Keep up the good work. And how can people reach you? Do you have a website, email, or LinkedIn? What's the best option if people?
I'm on LinkedIn, very much on LinkedIn, so we can.
Okay, so I'll share those contacts. Thank you, Darshak.
Thank you for joining us this week. If you haven't done so yet, subscribe to our show. Also, leave your comments and review if you enjoyed today's episode. Follow me on LinkedIn and Twitter at shasni for updates. That's SHASNIE. Once again, this has been Energypreneurs, connecting you to the innovative opportunities in solar power, batteries, and electric vehicles. Stay tuned.